Hello, everybody, and welcome to the Trading with Ashley show. Today was crazy in the markets with all of the systems that were down. It was very difficult to trade, but we figured out how to make money anyway. But today, what I'm going to talk to you about is very important because it is all about the benefit of purchasing a deep in the money call option versus 100 shares of a stock, especially if you are dealing with an ETF like the Qs. Now, I have over $500,000 in leaps on the Qs, but I was very strategic when I purchased these, and I'm going to show you exactly what I did so that you can try to replicate this or yourself when the time is right. So the way that this works, when you compare buying 100 shares of a stock versus buying a deep in the money call option on a stock that goes out several years, let me explain the difference. So that day that I actually bought these leaps, which at this point was April the 7th, I could have taken about $44,000 and invested it in 100 shares of the Qs. 7 months later, where we are today, that would have yielded me about a 44% return. Not bad, right? Especially if you consider the S&P 500 delivers annually anywhere between about 8 and 12%, depending on how bullish the market is. But if you are dealing with leap call options, what if I told you that you could take about $8,800 and just 7 months later, you would be enjoying 180% return. That's exactly what happened to me, and I am going to show you how to spot a setup like this so that you can replicate it for yourself. This is such an incredible way to trade if you catch a stock when it is at a great point in its price life cycle. Now, you can do this on any stock. However, I do prefer purchasing deep in the money call options on either the SPY or the Qs because there's a measure of safety in having an ETF that is dealing with several companies instead of just one company. Plus, if you look at the amount of money that it takes to buy elites versus an ETF like the Qs, you can really get the leverage dynamic pretty easily, whereas with stocks, it's usually hit or miss. So I prefer doing this on the Qs because they hold a lot of the companies that I'm very bullish on, especially since I believe we're at the beginning of the AI boom. But again, you have to be strategic. So I want to show you what levels to look for when you're ready to purchase your own deep in the money leaps call options. But before we get into all of that, I do have to share something really exciting with all of you that I think you will really enjoy taking advantage of. This Saturday, this upcoming Saturday, I am going to be offering a free webinar. Now, let me explain what this webinar is all about. This webinar will be explaining to you how I am going to kick off a $50,000 retirement challenge within my community. Now, I am going to use a variety of trading styles to accomplish the goal that I want to accomplish, and that is show you how you can outperform the S&P. We will be doing this for about 6 weeks, and I will be using a variety of trading styles, and it'll work for a variety of account sizes, but if you're starting with 50,000, you are going to be able to take full advantage of what I am trying to teach you. Now, why are my trading challenges within the communities that I run so successful? Because I am hyper-focused during the entire time of the challenge. I know that we have a goal. I know that many of you will be new with me and you want to see if this can actually work longer term. So I put a lot of energy into these challenges, looking for the perfect setups for all of you and keeping our risk always top of mind. And using that formula, it has been wildly successful for my communities. Most of them report that they make back in very short order the entry fee for the community, which makes me really happy because then they have learned how to do something that will last them for life. Now, this webinar, it is completely free, but there will not be a recording sent out. So if you want to enjoy the webinar and see everything that I want to show you, then you must be present. So I will be sure to leave the link in the description so that you can sign up for this webinar. And all of my webinars are wildly successful because I bring the energy. I really love helping people learn, and believe me, I will ensure that everyone that is on this webinar will pick up some incredible nuggets that otherwise they would not have known. Just to ensure that you're clear on all the information for the challenge. The challenge will actually kick off on Tuesday, November the 4th. I will be hosting this free webinar on Saturday, October the 25th. 5th. That should give you plenty of time to attend the webinar, learn about all the different ways that I am going to create income using the different trading styles. And then if you're interested, you'll have plenty of time to get in the community before all the excitement starts on November the 4th. All right, let's get into the content for today. I am going to show you why I have now over $500,000 in the queues using just Leaps call options and when I will actually buy more. I really want you to learn this. Let's go look now. First thing I want to do is show you the actual position that I was referring to. So here it is. It's the QQQ $400 call, and it expires December the 17th of 2027. Now, I actually purchased this on April the 7th. I'm going to show you why. I have 20 of them, which represents a current value of $500,000. I noticed it's exactly $500,000 on the dot. That is really unique to see. I have not seen that yet. Now, this growth has been amazing. This has been $322,000 of growth, actually almost $323,000 of growth. Here you can see the original price was $88.51 for each of these, and today they're valued at $250 each. And so you can see the power just in the growth that I have seen in just 7 months. I'm at 182% return. Now, I have purchased other Leaps and Skips on the queues. You can see all of these are in profit, and I will continue to purchase them as long as the chain continues to go out and the queues pull back to a level of support. So let me go show you what that level of support is so that you can be ready when you're ready to purchase this. And then I'm going to show you actually how to select what deep in the money call option you purchase. I want to show you a pretty cool stat. So you can see right here on the queues, the year-to-date return has been, for the NASDAQ, 18.57%. Well, you just saw in 7 months with the Leaps call option, I was able to produce 182%. So you can see where if you're in a bullish market and you catch these at the right time, Leaps will far outperform the actual ETF itself. For this next step, so that I can show you when you might be interested in considering purchasing one for yourself, I am going to take us to the Yahoo Finance charts. And you can see right here when things got really ugly back in April, this is when I was doing most of my buying. Those 20 Leaps were purchased on April the 7th. At the time, we were trading well under the 200-day moving average, and that's why I went in so heavy. But let's look at the other purchases I made. So you can see right here, any time that the queues touch the 20-day moving average, I would add additional positions to my portfolio. And if we happen to hit right here, this yellow line, the 50-day moving average, that's when I would add even more positions. So when you're looking at making your own purchase, you want to look at these important moving averages. After all, institutions are looking at them along with other traders. And so I'm going to zoom in a little so that you can get a better sense for when the timing may be for you to actually do this for yourself. So this is not the time. You can clearly see we are trading high on the Bollinger Band. We're at 60 on the RSI, so we're not quite overbought, but once we get close to 70, we will be. But I would set my sights right here at the 20-day moving average, right here around 601. After that, I would consider going again at the 50-day moving average right here at 588. And then if you want, you can look at the 100-day moving average at 568. And then if we happen to, I don't think it'll happen, but if we happen to get back down to the 200-day moving average at 530, I'm going to add a lot more. And so if you look at it this way, and if you have a budget for these, I like to go heavier the deeper it pulls down. Because if you've got a long time frame like I do, then you can allow these to mature before you start even trying to decide on when to cash them in. Let's specifically compare 100 shares of the Qs if I purchased it that day versus 1 Leaps that I purchased that day. So here's the details. 100 shares of the Qs right here, that would have been the $44,000. Now, if I would have sold those today, I would have enjoyed a lot of appreciation. I would have made $17,250 worth of profit. That's almost 40%. Again, that's really impressive. But by buying the deep in the money call option at the time, I fared far better. I paid $88.50 on average for these. And then if I sold them today at their price of around $250, that would give me a $16,274 profit on each of these. So you can see the profit is similar, but the capital to create that profit was much less. In the first scenario, it was $44,000. In the bottom scenario, it was only $8,800. Now you can see this is what gave me that incredible return on capital over 180% in just a short time. It was 4.7 times higher ROI than purchasing the ETF alone. Now, there are more risks associated with purchasing a LEAPS because you're having to deal with time decay, and that erodes this instrument over time. And if the Qs pulled back dramatically, well, then something that has appreciated in value would lose value. So you must have the belief and feel like we're at a point in time where the market is going to be forging ahead to actually invest in these. And then I want you to ensure that you're always considering stop losses when you do these. Finally, I'm going to take you to the option chain and show you, once the time is right, what to look for. So if you are going to want to take advantage of as much time as possible, you want to go out as far as possible. Right now, the chain is populated up to January 21st of 2028. So if you click that, it's going to populate everything that's available to us. The first thing you want to consider right here is your delta. When I buy a deep in the money call option, I am looking at anything from a 0.7 all the way up to a 0.8. So there's several options in between. A lot of times I like to see where the volume and open interest is, and I might gravitate towards that because it will offer a better feel because the bid-ask spread will be more liquid. There's more activity on the chain. Now, the further out you go, there's not as much activity, so you may decide to go to the December 2027 chain instead. But if I was going to do this, let's look right here at 568. The delta's great. It's 0.72. And what this means is for every dollar that the Qs move, then something that cost me $100 and almost $31 now, it would go up or down by about $72 with each dollar movement. But the beautiful thing about choosing a delta like this, if you can get it at a strong level of support, then as the ETF rises, this delta starts to rise as well. And so before you know it, you're looking at it and your delta is almost going dollar for dollar in price movement every dollar up of the Qs. And because you're able to buy so many more of these than 100 shares of stock, you can really get some great leveraged opportunities. So your two options would be, you could either buy 100 shares of the Qs. If you were going to do that right now, that would be about $61,000. Or you could decide instead to invest in a deep in the money LEAPS. So if you were going to do that at the 565 level, the way you would determine how many you could get, you would take that $61,000 that you were willing to invest, and instead of purchasing the shares outright, you would instead buy as many of these as you can. 465 shares. Now, these are in lots of 100, so you would have the opportunity to go ahead and purchase 4 of these LEAPS instead of just 100 shares of the Qs. And as I just showed you, you can really get some outsized gains. But again, this is not the time. You don't want to do this when the market's riding high. You want to be ready to strike for when everything pulls back, when everyone's scared. That's when I jump in. I hope you're inspired now and you have your shopping list ready for the LEAPS that you want on the Qs or the SPY. I am telling you, this is an incredible way to trade, especially if you follow a set of rules and if you keep yourself safe. How do you keep yourself safe? Well, it's very important when I do call options that are longer dated. I watch them closely, but putting a stop loss on is always a really good idea. Usually when the call option is brand new and I've only had it for a few months, I will keep a 50% stop loss on it just for safety. Now, it's rare that something that is as far out as a couple of year LEAPS call option that it will hit a 50% mark, but if it does, I want to take advantage of preserving that cash so that I can get a better entry, maybe even further out. And then once the LEAPS call option is running and it's really starting to make a lot of money, if you don't have a lot of money to the side and you want to ensure that you can take advantage of future market pullbacks, then you can tighten up your stop loss and ensure that if you were to get stopped out of your trade, that it would always be in profit after it gets going. There's a couple of different ways that you can do this, and it's based on your own risk tolerance. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, don't forget to sign up for my free webinar on Saturday. I cannot wait to spend the weekend with all of you. I'll leave another video that has a lot to do with the Qs, and I'll leave that for you right here.